how far back can the IRS really go? Can they really reach back 10, 15, 20 years? And is there ever a point when the IRS just forgives old back taxes? Well, I'm going to walk you through exactly the truth about the IRS 3-year rule, the 10-year statute of limitations. I'll explain what that means, and what you got to do if you got unfiled taxes for several years. I'll also explain how IRS back taxes forgiveness and debt settlement actually works, and how to protect yourself before the IRS comes calling. But here's the reality. If you've never filed a tax return, there's no clock running. That means there's no statute of limitations running on your return. That means if the IRS files a return, there's like forever. They can go back till forever to get your taxes. And once they do, 2 key things kick in. One is the 3-year rule, and that usually means the IRS has 3 years from the due date of the return or the date the return is filed to audit you. And the 10-year rule. So once they assess a tax, the IRS has 10 years to collect that tax. So that 10-year window is called the collection statute expiration date, or we call it the CSED. But remember, no filed return, no start date, no expiration. So the longer you wait, the longer the IRS can pursue you. Now, here's something most taxpayers don't realize. You can't find this on the cloud brain, or whatever you want to call a GPT or whatever. What happens is the IRS only wants to look at the most recent 6 years. That means you don't have to file every year you missed 10, 20 years back. You just need to file the most recent 6 years. And that's really practical because they're not going to chase after 10 years and hang on to records to prove to you unless they file a substitute for return. Now, an SFR is when the IRS files a return based on their known real estate, like the knowledge they have from other people presenting them with information, like your W-2s or 1099-R. So I had a client come in, has a 2014 and a 2016 SFR, which means it's a substitute for return that the IRS filed on these folks for $167 and a little over $100,000 in 16 that came out of a retirement account. Now, they put that person who took the money out as single, not married, filing joint. So the statute hasn't begun to run on 14 or 16. It won't until we file 14 and 16. Now we start the statute. They have 10 years to collect, all right? And then the IRS will give them 10 years to collect. But we want to reduce their tax liability, so we're going to actually file an actual return. This kind of a thing takes planning and strategy. And then it gets to the point where once all your taxes are done, what are you going to do? A lot of people think settling for less with the IRS with an offer and compromise is the way to do that. But the IRS looks at everything. Now, if you're not an accountant, and neither am I, let's talk about this. They're going to look at you from the balance sheet side, and they're going to look at you at the profit and loss side. A balance sheet, if you're not an accountant, is what you own and what you owe. So think about that as I own a house and I have a mortgage. It's just the most common one I can think about. You have a car and you have a loan on the car, what you own and what you owe. And then the other thing they look at is your profit and loss, your income and your expenses. And on the expense side, they've got 4 or 5 favorites that they have that they go with what the Department of Labor put together that's called the national standards. So for food, clothing, shelter, if you have your housing expense, that's by your county. Your food, it's by the national standards. Your car, it's by your geographic region. Car ownership and car operating. If you don't have a car payment, good luck with that car ownership, because they're looking at that and saying you're paying for a car, so that's a car ownership cost. We'll give you that. Health insurance helps you out, student loan interest, and if you have a state tax debt, that would help you out too. But what we're looking at is the IRS goes about this in a different way. They're not going to be looking at, okay, can you deduct credit cards? They really don't care. Their job is to collect taxes. So if you haven't filed your taxes, you got to file the last 6 years. That's the good place to start. And if you don't know how to do that, you don't know how to collect the information, you can contact a qualified tax professional. A CPA, an enrolled agent, a tax attorney might be a little expensive for that, but they'll help you with the filing your taxes, and a qualified tax professional who can help you with both on the collection side would be to your favor. So if you've got this kind of a situation, like you've got unfiled taxes for several years, or you're worried about the IRS statute of limitations on the collections, you owe back taxes, but you haven't filed for the last 6 years, find us at Best Tax Pro. We're available for representation. We'll check your records, check what years matter most to the IRS, and we'll help you get in the clean. And then we'll find out what the best exit strategy possible is for your unique tax problem. Everybody's tax situation is unique and different. I've got a few few videos that talk about the different types of programs that the IRS has out there, but drop your questions in the comments. I read them all. And if you really know someone struggling with old taxes or back taxes or unfiled returns, share this video with them. It might save them from a lot of stress. I'm Josh with Best Tax Pro, and I hope this has been helpful.